Did you know that real estate has consistently outperformed the stock market over the last 50 years? Do you want to invest in real estate, but you are not sure where to start? Purchasing real estate can be a fantastic method to increase wealth, create a passive income stream, and attain financial independence. However, beginners may find it daunting as well. For those who are just starting out as real estate investors, we have developed this video. You will discover the fundamentals of real estate investing here, from identifying the various investment kinds to selecting the ideal properties and assembling a profitable portfolio. You will have all the resources necessary to succeed as a real estate investor. Define your investment goals. Setting specific goals for your real estate investments is the first step toward building a profitable portfolio. The goals you set will help guide your selections about which properties to buy, how much to invest, and how long you intend to keep them. Consider the type of income or return you want to see from your real estate investments. You should also consider how much risk you are willing to accept, how much time you want to devote to maintaining your properties, and the type of property you choose to invest in. Once you have a better understanding of what you want to achieve, you can start investigating real estate possibilities that best meet your objectives and take steps toward achieving them. Do your research. When it comes to investing in real estate, research is essential. It is critical to understand the market you are investing in, the sorts of properties available, and the risks connected with investing. It is also crucial to research your local laws, taxes, and regulations. Do some research on the type of insurance you will need to buy and the zoning restrictions that may apply to the property you are looking at. Knowing the rules of the game before investing will help you maximize your opportunities while limiting any potential hazards. When studying your potential investment, ensure that you conduct a comprehensive due diligence. Examine the area's crime statistics as well as economic metrics like median income, median property value, and job growth. You can also look into funding possibilities and see if there are any grants or tax benefits in your area. All of these factors can affect the success of your real estate investment. Finally, you should comprehend the real estate cycle and how it affects property purchases, sales, and rentals. This knowledge will enable you to make informed decisions and maximize your return on investment. Consider the neighborhood. When investing in real estate, one of the most crucial elements to consider is the community in which you plan to invest. When evaluating a potential investment property, significant elements to examine are the local economy, schools, crime rate, transit access, and future development plans. Are there any safety concerns? What types of people dwell in the neighborhood? How do local firms operate? Before making a final decision, these and other questions should be considered. It is also worth noting that neighborhood trends are continuously changing, so remain up to date on news pertaining to the property's area. What was once a peaceful and quaint residential area may one day become a thriving business hub. Keep track of any developments that may impact the value of your investment. Finally, when considering a real estate investment, taking the time to research and evaluate the neighborhood is critical to making an informed selection. Knowing what to look for and the hazards associated with a specific area will help ensure that your investment pays off in the long term. You know the risks? When contemplating investing money in real estate projects, it is crucial to recognize the inherent uncertainties and possible drawbacks that could come about. By having a deep understanding of the intricate details of the real estate market, an investor can make well-informed choices by thoroughly grasping the risks involved. This knowledge acts as a basis for wise judgment and careful decision-making when contemplating engaging in real estate investments. The risks to consider are: market risks. Real estate markets can experience ups and downs. As an investor, you must be prepared for market volatility and assess how they will impact your investments. Property management risks. As a landlord, you must examine the potential risks of maintaining a rental property, including tenant turnover and eviction, late rent payments, and property damage. Financial risks. To invest in real estate, you must be financially stable. Make sure you know how much money you can afford to invest in a house and have a backup plan in case of a financial disaster. Legal hazards. Real estate transactions involve specific legal hazards. To ensure that you understand your rights and obligations, review local laws and regulations or contact with a skilled attorney. Before you invest in real estate, you should be aware of all of the hazards. Knowing what to expect ahead of time can help you achieve success as an investor. Have a solid plan. Investing in real estate can be a thrilling experience, but it is critical to approach it with a strong strategy. A strong plan will assist you in making educated decisions, developing ways to optimize your investments, and minimizing risks. Begin by identifying your investment goals. What are you hoping to gain? Are you seeking long-term wealth or short-term gains? Knowing the answers to these questions will help you decide what types of properties to invest in and how to finance them. Once you have decided on your aims, you should conduct market research. Consider comparable houses and neighborhoods to estimate a reasonable price range for potential investments. This will assist you in identifying prospective prospects in locations with high growth or rental rates. Get pre-approved for a loan. Before investing in real estate, you should get pre-approved for a financing. Knowing how much you can borrow and what interest rates you qualify for might help you make informed real estate investing decisions. Even if you have enough cash to buy a home outright, getting pre-approved for a loan might open up more financing possibilities and better conditions. Work with a qualified real estate expert or coach. There are numerous possible dangers to be aware of when investing in real estate. To reduce the danger of costly mistakes and maximize your return on investment, it is generally prudent to seek the assistance of an experienced real estate expert or coach. A real estate coach can provide vital market insights and help you make the best decisions for your investment portfolio. Have a contingency fund. When investing in real estate, you must have a contingency fund to handle any unforeseen costs that may develop. A contingency fund is money set aside to cover any additional expenses related to a real estate investment, such as repairs, taxes, or legal bills. Having a contingency fund will ensure that you can handle the increased costs of your investment without going into financial trouble. Understand the closing process. Closing on a real estate investment is a critical milestone in your journey, and understanding the process can give you more confidence in your purchase. The closing procedure consists of various steps. First, you must have a contract that specifies all of the terms of the sale. You will then need to arrange for a title search to ensure that the property is free of liens and other encumbrances. You will also need to obtain insurance and schedule a home inspection. After you have completed all of these processes, you will meet with a closing agent to sign all of the papers and pay any applicable costs. The closing agent will review all documents and explain both parties' duties. They will also ensure that all money has been exchanged in accordance with the conditions of the contract. Once this is completed, you will be the official owner of the property. Have patience. Real estate investments can take a long time to realize their full potential, so patience is essential for success. Whether you are new to real estate or have been doing it for a long, patience is key for seeing your investments thrive. Thanks for joining me on this exploration of real estate investing. If you found this video helpful, be sure to like and subscribe for more content on building wealth and achieving financial freedom. In the comments below, share what interests you most about real estate investing. Are you leaning towards buying and holding or exploring alternative strategies? Let's build a community of aspiring real estate investors and support each other on this journey.